Hello friends, as we all know, Tata Group is coming up with an IPO after all 20 years and market is very excited about the company of Tata Group. And why not? The Tatas have given a solid returns to their investor over decades and they are a very trusted brand. So let's not waste our time and let's get into the discussion about the company. Now I want to discuss first that this company has tremendous listing gain possibility with over 70% GMP. So chances of you getting a lot in this IPO is very less, but we will discuss this company about how it looks for a longer horizon and not just for the IPO purpose. So let's say little introduction to the company. The company was incorporated in August 1994 in the name of Core Software System Private Limited, which was later converted to Tata Technologies Limited. The company has headquarters in Pune. It has total 6 offices, 5 in India that are in Mumbai, Lucknow, Jamshedpur, Bangalore, and Gurugram. One office is in Japan, which helps them cater their international clients. Tata Tech also has global presence to its subsidiaries in multiple countries like USA, UK, Germany, Canada, South Korea, Singapore, Netherlands, Thailand, China, and Sweden. So they are present globally also. Okay, so now we will see this in 4 segments, that is company and industry analysis, then financials, then the key strength and weaknesses, and about the offer itself. So first thing that we think of when analyzing a company is what does the company actually do. So it operates in ER&D services industry, that is engineering, research and development. So what is ER&D exactly? ER&D services is defined as a set of services offered to enterprises on activities which involves the processing of designing and developing a device, equipment, assembly, platform or application such that it can be produced as a product for sale through software development or a manufacturing process. Now, it is very difficult to understand this by this definition as it is very lengthy. But to put it in a simple word, that one company which is going to which is a mass manufacturer will give a contract to ER&D company. Now, ER&D company will provide the manufacturing company with a design for a device or equipment that they want, and then the mass manufacturing company will mass manufacture a product based on the design given by the ER&D company and will sell it. So players in ER&D services industry typically focus on design development, testing, rollout and maintenance aspect of the product and process development chain, but not on the mass manufacturing. Now let's see a case study that is already given in the RHP by the company. The Tata Motors Limited engaged with Tata Technologies for converting their existing ICE engines, which are internal combustion engines, to EVs. Now, this project involved complete ownership for design, packaging, integration of EV components like battery, motor, charging socket, and respective electronics in the base car. So, Tata Technologies took this contract and they converted the IC vehicle into EV. Not only that, they did it within 18 months, and the car also got 4 star safety rating. So, to date, we already know that Tata Motors have launched 2 IC that were converted later into EV. Tata Tigor EV that was launched in 2021 and Tata Tiago EV 2023. So that must clear our doubt about what does company actually do. Now, what is the spectrum of this sector? So ER&D services include very broad spectrum of things that goes on from mechanical engineering to manufacturing engineering to cloud engineering to 5G services to software engineering, design and development, etc., etc., as you can see in the slide. Now, why do we invest in any company? Because that company must have a chance of growth. So let's see the growth of the sector. So ER&D sector overall is expected to grow at 10% CAGR from 2022 to 2026, and in past also it has grown at about pace of 9 to 10%. So that is a decent amount of growth. Now what are the key drivers in case of this company? So first driver is focus on sustainability. What does that mean? Nowadays, the companies are more focusing on the carbon neutral models, the electrification of the vehicles. So focus on sustainability is increased. So more and more new designs will be needed, and that's where this company comes into focus. Another thing is shrinking innovation cycles. So the customers nowadays want newer and newer products with less time. So the product innovation cycles are decreasing in time and newer products are needed, and this company comes into focus also. Another factor is growing product complexity, turn towards digital thread, advent of generative AI. These are the key drivers in case of this industry. Now let's see about outsource ER&D. So our company is ESP, that is engineering service provider. Now what does that mean? Many companies do their own ER&D, so they themselves develop a product and then they mass manufacture it. So the outsourced ER&D companies don't come into this picture. Meanwhile, many other companies do outsourcing of developing process from the companies like Tata Technologies, and then they mass manufacture it. Now there are many benefits to outsourcing a development process. That includes cost savings, flexibility, involvement is less, there is time saving, and the scalability is more. So what is the growth of outsourced ER&D? Now, previously we saw growth of overall ER&D sector. Now let's see the growth of outsourced ER&D sector. So in 2022, the spends in outsourced ER&D sectors were around 105 to 1010 billion dollars, as seen on the top of this chart. Now, as you can see in the chart, the Western Europe contributes to about 37 billion out of this 105 billion. So the major contributor to this spending is Western Europe. The second number is in India. So India spends about 25 billion dollars in outsourced ER&D market. But as you can see in the image, the projected growth for ER&D sector in Western Europe is 10 to 12%, while in India it is projected to grow at 14 to 16%, which is much higher than Western Europe. Again, Eastern Europe has even higher growth than India, that is 18 to 20%. Now let's see the sector-wise contribution from this ER&D spend. So it is divided into three kinds of vertical. First is manufacturing-led vertical, which contributes to around 48% of ER&D spend. Second is high-tech-led verticals, which contributes to around 40% of the total spends. And third is services-led verticals, which contributes to around 12% of verticals. Now, in manufacturing-led verticals, there are three further segments that are automotive, industrial, and aerospace and defense. In high-tech led verticals, there are also three different verticals like software and internet, consumer electronics, and semiconductor. And in services led verticals, there are further three categories, that is BFSI, that is banking and financial services and insurance, then retail, and then healthcare. Now, among all these verticals, software and internet is the highest contributor to the ER&D spend, that is around 20%. And the automotive segment contributes to second highest spends in ER&D sector, that is around 10% of total spends. Now, along with ER&D, this company also has presence in education sector. So you might be surprised why I have to mention this, but they have quite a good business in education sector. Their education business mostly focuses on addressing academia and corporate scaling requirements by leveraging their manufacturing domain knowledge and their I get IT offerings. So this company already has long presence in manufacturing space, and their knowledge in this space is very good, so they are leveraging this knowledge to use it in an education business. Also, they have acquired I get IT platform in 2005. This I get IT is an online learning platform. Now this education business has helped them secure very high profile enterprise client. They have since expanded their offerings to assist colleges and universities to develop curriculum, build dedicated innovation labs to teach students next generation skills and capabilities required by global manufacturing industry. Now let's see case study to understand education sector. Now they have signed 10-year memorandum of agreement with state government in 2020 to transform 150 government-owned ITIs with upgrades to technological equipments, machinery and tools. They offer training programs and provide equipments and software support for modern software standards. Now, as of academic year 2022 to 2023, all ITIs have been modernized with large numbers of students enrolled in different trades pursuing various short-term courses. Now, this project will help improve the employability of the youth who complete these courses and help the industry embrace newer technologies in the state. Now let's see revenue from the education sector. Now If this company's IPO had come in FY21, I would not have mentioned education sector. But in FY23 and FY22, the contribution of education sector to revenue is very much increased, and so it is important to mention this sector and to track this sector. So revenue from operations from education sectors, you can see that it contributed only 1.7% in FY21, but it increased to 12.64% in FY22, and further it was at 8.76% in FY23. So it is a good amount from education sector and important to track this sector as well. Now let's see revenue of this company from each segment. So the services segment contributed to around 80% of the revenue in FY23. So that is a major chunk of the revenue. And in the services segment also, the automotive segment contributed to around 70.94%. So in part, you can say that this company has most of their focus on the automotive sector. Another segment, that is others, that has contributed to around 9.05% of the revenue. And the segments that are included in others are aerospace, defense, construction, high-end machineries, etc. Now, the second segment is technology solution segment that contributed to around 20% of the revenue. Automotive segment contributed to around 70.94% FY23, so it is important to see the growth of it. So the automotive segment is expected to grow at 11% CAGR up till 2026, and if you see only hybrid and electric mobility, that is expected to grow at 12% of CAGR, as is seen on the right side of the chart. Now on the left side, you can see the breakup of different sub-segments under the automotive segment. In that, body engineering contributes to highest amount of spends. After that comes infotainment and connected segment. Then comes the hybrid and electric mobility segment, safety systems, ADAS, autonomous, traditional powertrain. These are some sub-segments under the automotive segment. Now, what are the growth drivers in case of auto industry? Now, this is separately mentioned in RHB. They have uh, they have shown them as ACE, that is automation, connected, and electrification. Now, automation segment include that nowadays cars do some tasks themselves, like applying brakes, like parking assist, and cars like Tesla drives by themselves. So that means automation in the auto industry is increasing day by day, and so it is a growth driver in this industry. Also, second one is a connected segment. In connected segment, you can include cars with diagnostic efficiency, with navigation system, with payment system also. So these are all included in connected segment. And third is electrification, that is the shift towards EV. Now you can imagine the growth in EV segment from 2021 to 2022 was almost about 55%. So these are major growth drivers in auto industry. Now there are two more things that I want to talk about in case of company, that is geography wise distribution. So as you can see in the diagram, the Europe contributes to around 49% of total ER&D space. So Europe is a major contributor to this space. As we already know that Europe is a home for many big auto companies like Volkswagen, BMW. So it automatically contributes highest to the ER&D spend. The second one is Asia Pacific region that contributes around 38% of the spends, and third one is North America with 13% spends. Now that was overall ER&D spend. Now in case of outsourced ER&D spend, Europe contributes even higher, that is around 75 to 80%. Now as you can see that Europe is certainly a major player in ER&D spends in auto industry. So it automatically means that if the company has good presence in Europe, that means it must have a good growth. So now you can see on the top table that revenue from India is around 35.14%. As this company's promoter is Tata Motors, it is obvious that this company will have good chunk of business from India. Second highest is from Europe, that is 26.9%. Third is North America with 19.26% and rest of the world with 18.71%. So this company overall has good diversification geographically and also good presence in Europe. Now, second concept that I want to discuss here is off-site and on-site. So what does that mean? So on-site means that the ER&D company will go to the contract giving company on their site and then they will run their operation. And the off-site business means that the ER&D company will do their work from their own office from another site than the contract giving company. For example, if some company in Europe is giving orders to Tata Technologies, if the work is on site, then Tata Technologies will have to go to Europe to the company's site and work. And if it is off-site works, then Tata Tech will stay in India and work for the contract giving company in the Europe. Now, what is important to understand here is on-site work has more spending for the ER&D company, and so if the on-site work of the company is more, that means the company's margins are likely to be less. That the Tata Technology has 49% of the revenue from on-site business. Meanwhile, the competitors like LTTS and Tata Elxsi has lesser revenue coming from onshore business. With LTTS, it is 40% coming from onshore business, and with Tata Elxsi, it is even lesser, 26% coming from onshore business. So you can gauge from this that Tata Technologies might have lesser margins than LTTS and Tata Elxsi. Now let's talk about the competitors of the company. Now there are three more players that are already listed in this space that are competitors to Tata Technologies. One is KPIT, other is LTTS and Tata Elxsi. Now you can see from the third column that auto vertical has contributed about 88% for Tata Technologies revenue, 96% in KPIT Tech. So these two companies are more of a focused automotive play. Meanwhile, auto sector has contributed to 33% of LTTS revenue and 46% of Tata Elxsi revenue. So that means the LTTS and Tata Elxsi are more diversified than Tata Technologies and KPIT Tech. So Tata Technology is more comparable with KPIT Tech than LTTS and Tata Elxsi. When this IPO was announced, we were all thinking that Tata's also have Tata Consultancy Service, they also have Tata Elxsi, and they also have Tata Technologies. Now these three companies look very similar. So we were all wondering what is the difference between all three companies. So first, let's talk about Tata Consultancy Services. So this company provides IT services offering end-to-end IT solutions and services across vertical. Now does that mean that this company doesn't operate in automotive sector? But they have many other sectors where they operate and they are not a pure automotive play. Now let's talk about Tata Elxsi. Now Tata Elxsi, as we already discussed, is a more diversified than Tata Technologies. Obviously, that automotive sector contributes to higher amount of revenues in Tata Elxsi also, but it also has presence in sectors like healthcare, BFSI, and in technology also. Now in auto sector also, this company is specially focused on software and digital engineering service. Meanwhile, Tata Technologies is a pure ER&D play which offers end-to-end solutions across the value chain with focus on manufacturing-led verticals. Now, let's see the financials of the company. First is the revenue. As you can see in the chart, that the revenue has grown at CAGR of 29% over last 3 years, which is a very decent growth. Now, as the services segment contributes to around 80% revenue, we can see there we can see the services segment CAGR, which is also at 28%, so which is also a very good number. Now, let's see operating profit number. The CAGR of operating profit from FY21 to FY24 expected is around 34%, so it is even higher than revenue growth. Now, operating profit margins, they were around 16.2 in FY21. Since then, it has remained stable around 18.6%. The net profit from the operations has grown at CAGR of 43% since FY21, which is a very good growth. Now, let's see the most interesting thing about this financial analysis, that is the comparison with peers. First is revenue from operations. As you can see that LTTS has highest revenue from operations, while meanwhile others are having similar kind of revenue from operations. Now that may be because of LTTS being more diversified than other companies. Now, growth of revenue in constant currency terms, it is highest with KPIT Tech, that is around 36.7%. So that's why KPIT Tech is valued at higher valuation than its peers. It is lowest with LTTS, that is around 15.8%, and Tata Tech and Tata Elxsi has growth of 24%, which is a decent growth. Now, as you can see, percentage share from services revenue is almost 100% in case of LTTS, Tata Elxsi and KPIT Tech, but it is 80% in Tata Technologies as it also has presence in education sectors. Now let's see about operating profit. So Tata Elxsi has higher profits than Tata Tech and KPIT despite having lesser revenue from operations, because the operating profit margin of Tata Elxsi is 30.99, which is much higher than Tata Technologies and KPIT Tech. Now, one of the factors contributing to higher margins may be because of the diversified portfolio. As you can see, LTS also has higher margins than Tata Technologies and KPIT Tech, which mostly operate in automotive segments, and two players that are mostly operating in automotive segments have very similar margins of around 18.6%. Now let's see operating metrics. So top 5 clients contributed to around 71% of Tata Technologies business. Now that looks very concentrated compared to their peers. Now Tata Elxsi has top 5 clients contributing to their 44.5 revenue, while LTTS has only 14.9% revenue from top 5 clients. So that looks like bit of a concentration risk from Tata Technologies. But it is also important to know that Tata Motors is the biggest client of the Tata Technologies, which contributed to around 40% of its revenue. So, as Tata Motors is promoter of the Tata Technologies, this does not look like a risk to me. Now, let's see employee metrics. So the company has decent employee base with 12,451 employees, which is similar to their peers, except LTTS, which has higher revenue and also has higher employee base of 23,880. Now let's see attrition rate. The attrition rate of this company is higher than its peer at around 17.2%. Now, if you had seen the financials 6 months before, the attrition rate of this company was even higher. That was around 23%. So it has come down from 23% to around 17.2%, and we expect it to go down as it is higher than its peers. Now, the most important slide in this whole presentation, which everybody is waiting for, is valuation. So Tata Technology is coming with a price band of 475 to 500 rupees, and at the higher band price of 500, the P ratio of the company comes around 32.53%. Now that is much lower than its peers. KPIT Tech has a P ratio of 80.31, Tata Elxsi has a P ratio of 61.55, and LTTS has P ratio of 37.47. So at the IPO band price, the company looks very attractive in terms of valuations. Now, what happens after listing? So, listing gains of 350 rupees are expected with this company. So, if we include 350 with 500, it comes around 850 rupees. So, if we consider post GMPP ratio, that comes around 48.13, which is still lower than its two peers KPIT and Tata Elxsi. So the valuation of this company, although are looking higher than overall market, are lower than their peers. So that is a good point for this company. Now talking about debt to equity ratio, it is 0 for this company as the company has no debt. The promoter holding in this company is 66.79%. That is a decent holding by promoter. Now, as this company has no debt and has a positive cash flow, the company's financials look good. Now, let's talk about key strengths and key weaknesses of this business. The key strengths of Tata Technologies is their deep expertise in auto industry. They are offering end-to-end solutions in EV, connected and autonomous vehicles. They have strong brand, they have long relations with marquee clients, and they are experienced promoter with good leadership team. Now, what are the key risks? First risk is dependency on top 5 clients. Now, as we all know that Tata Motors is the promoter of the company and it contributes to around 40% of the revenue of the company. So, the risk of dependency on top 5 client does not look that much big. Second one is dependency on auto sectors. As you all know, auto sector is a cyclical sector, and if there is an economic slowdown, auto sector may also show slowdown that may affect this company. The company has dependency on human talent. There is also a risk of technology obsolescence, and there is also intense competition present in the market. There are already three listed players in India only. There are KPIT, Tata Elxsi, and LTTS. Now let's see about the offer. Now the offer is of 3042 crores. Out of this 3042 crores, there is no fresh issue. Entire IPO is OFS. So the promoters are taking the money and exiting from the company. Now, as you know, this company has good financial with positive cash flow and there is no debt in the company. So offer for sale in this company doesn't look that bad. Now, promoter and promoter group holdings, which were pre-offer 66.79%, will stand at will stand at 55.39% post offer. Now, who are selling their stakes? Tata Motors Limited is selling 11.4% stake amounting for 2,312 crores rupees, and Alpha TC Holding Limited and Tata Capital Growth Fund is selling about 3.6% of stake amounting for 730 crores. Now, among this offer, 10% of shares are reserved for Tata Motors shareholders who have stock before 30th November. And if you have bought the share after 13th November, so you will not be eligible for shareholders quota. Now let's see IPO details. The IPO is of 3042 crores. Price band is of 475 to 500 rupees. Face value of share is 2 rupees. IPO opens on November 22nd and closes on November 24th. The lot size is 30 shares in one lot. The QIB get 50% of the share, retail get 35%, and NII get 15%. Now, what is the conclusion of this discussion? Tata Technologies have good business model with strong promoter. They have higher double-digit growth expectation. The company has zero debt and has positive cash flow. And the valuation of company is lower than its peers. So this looks like ticking most of the boxes. And it is a yes for a long-term perspective. But it is important that if you are investing in any company for a long-term perspective, it is important to track their business with quarterly updates. So that's it for the Tata Technologies IPO video. If you like the video, please hit the like button, comment on the video, and don't forget to share it with your friends and family. Thank you friends. Until next video, Jai Hind.